Hey, in this video, I'll explain what is a crypto bull run. Did you know that during the COVID-19 pandemic, Bitcoin's price went full incline? And when I say full, I mean even more than 100%. Nope, we're talking 302%. That's right. Due to many factors, including fear of stock market downturns and some economies struggling to stay afloat, the public turned to cryptocurrency, especially believing in Bitcoin during a time of high financial risks. In just a few months, Bitcoin's value went up more than significantly, full force, no stopping, shooting from the bottom upwards. And doesn't this assertiveness and speed of this phenomenon remind you of a bull surging towards the muleta? Well, crypto enthusiasts definitely think so. Welcome to Crypto Finally Explained, the most crypto-friendly educational YouTube channel for actually learning crypto. Here, I've finally explained crypto topics using simple animations, visual doodles, and real-life examples, so no matter if you're 5 or 75, you'll be able to understand it. In this video, I'm going to answer questions such as what is a bull run in crypto, why it happens in the first place, and discuss predictions for the next crypto bull run. So, let's get right into it. To start off, let's quickly run through what is a bull and bear market in crypto. I have a dedicated video on the topic comparing both of these market conditions, so if you're interested to learn more, make sure to check it out. First off, the origins of the names are unknown, but most people think it has to do with how a bull and a bear attack. The former goes full speed and pounces by tilting its head upwards, while a bear starts off standing, sure, but then swipes their paws down. If you're somewhat familiar with the economy or check the newest business updates, you might have already heard these terms. Bull and bear are often used to describe the current situation in the market. More specifically, whether certain assets are depreciating or appreciating in value. A bear market means that there is a declining trend in stock prices. So, during this time, the stock value is in a continuous downward spiral, resulting in a slowed economy, increased unemployment, layoffs, and overall a sad time to invest. Thus, investors are pessimistic or bearish. Bullish behavior, on the other hand, is the opposite, so it should make it easier to grasp what is a bull market. The prices go up quite rapidly, the economy is in favorable conditions, and employment is high. Now, before we move on, you should also know what is a secular bull market. Basically, the keyword secular here points out market activities that occur during a longer period of time and are long-lived. So, no short-term trends, but consistency. There are more intricacies to these tendencies, but this video would soon turn into an economy lesson. So, now that you have at least a basic understanding of what is a bull and bear market, let's stop here and get back to crypto. I promise it's not that difficult to make a connection. A crypto bull run can be defined by a substantial price appreciation across various cryptocurrencies over an extended period of time. That's a very fancy way of saying that cryptocurrency prices go up fast. A kind of an unwritten but commonly accepted rule is that an asset is considered in a bull run when the price rises 20% or more after two declines of 20% each. During the time of a crypto bull run, the market is absolutely blooming. I'm talking extra positive sentiments about crypto, widespread media coverage, and increased trading volume and demand. There is also way more activity on cryptocurrency exchanges, which, if you don't know what they are, I also have a full video about. Basically, everyone is happy and optimistic and looking to invest. Like a golden age for crypto. But that sort of makes you wonder, what determines the high influx of investors and such a steep pitch in crypto prices? Well, like with many questions in our mysterious crypto world, there is no one clear answer to this one either. Still, during the years of analyzing the market's volatility, crypto experts were able to work out a pattern that explains the whole affair a bit more. So, strap in. Let's get into the nitty-gritty details. At the beginning of 2013, Bitcoin's price surged 10x, jumping from a lowly $100 to $1,100. It is mainly considered that the growing demand from none other than China massively contributed to Bitcoin's price going up. And funnily enough, at the end of the same year, China banned Bitcoin after renewing its own regulations. As soon as something bad happened and the world learned about China's crypto ban, it sent Bitcoin into a bear market. However, it's important to note that unique events are not the only thing contributing to a crypto bull run. There have also been cases of price changes due to pop culture support, like DJ Khaled promoting a crypto wallet in 2017, institutional adoption, like MicroStrategy's $600 million investment in Bitcoin, acceptance from traditional finances, like finance experts giving optimistic crypto advice, and most importantly, Bitcoin halvings. Now, this is also a term you're supposed to know, but before I move on, make sure to like this video and subscribe to my channel if you enjoyed the content and want to keep on learning about crypto. So, halvings. Overall, the term is quite self-explanatory, right? Cutting something in half. So, in the crypto world, the thing that you cut in half during a Bitcoin halving is actually the reward for mining it. I won't get too technical here, but you're probably aware that Bitcoin uses a proof-of-work mechanism, which basically means that a bunch of people confirm Bitcoin transactions and get rewarded with BTC for doing so successfully. Well, every 4 years or so, the Bitcoin reward I just mentioned gets cut in half from its previous amount. In 2009, the reward for mining a block of transactions was 50 Bitcoin, then it dropped to 25, later to 12.5, and so on. Well, you get the idea. Reasons behind halvings have to do with inflation and coin issuance and are a bit out of the scope of this particular video, but do let me know if you'd like to learn more. Simply put, every time Bitcoin is halved, news of the event reaches the media, which somehow rebuilds fascination with digital assets and emphasizes Bitcoin's deflationary tendencies. All of this mass excitement contributes to the crypto bull run. Well, at least to some extent. Some financial experts say that all of the previous crypto bull runs have been driven solely by the hype, excitement, or speculation about a certain token. Kind of like hyping up a movie prematurely because Brad Pitt is in it and the plot is a fairy tale retelling. You can just imagine the gross income that would make. But maybe it turns out that the movie has no substance and the production is unwatchable. It was only mainstream hype. The same can happen right before a crypto bull run if some cryptocurrency is gaining attention or is new and, for some reason, exciting. However, if we were to listen to accredited financial advisors, there are going to be fewer cases like that as we go on. In other words, people will go see the movie because it was directed by Martin Scorsese and has an IMDb score of an 8. Like, legitimate reasons. In this case, the bull run would be entirely justified and the reasons for it transparent. Now, as we continue with the video, the natural question arises. Where are we now? Surging like bulls or swooping down like bears? If you're just getting into crypto, your entry point is quite interesting. You see, the frequency and length of a crypto bull run can vary significantly, quite fitting for crypto's volatile market. And so unless there's a long-term, noticeable incline, like the secular bull run in 2017 for example, it can be difficult to determine where we are now. The last time we witnessed crypto booming was 2021, so is the crypto bull run over then? Or are we still in it? If we rely on the 20% principle I mentioned at the beginning of my video, we are now in a bear market. And if we're following Bitcoin halving season, the next crypto bull run should take place in 2024. But then again, these are just some of the more common speculations. Unfortunately, if you're scheming how to skyrocket your investments during the next alleged bull run, you'll neither know when precisely it'll happen, nor when will crypto bull run end. Of course, you can research in preparation for it, but no one will give you the exact timetable. More likely, there will be times during the run when you'll be sitting there, asking yourself questions like, is the crypto bull run over? Or maybe it was just a mean tweet that caused a slight drop in the Ethereum price. If you want to take advantage of the next bull run, I suggest you start analyzing what's happening in crypto. And what better way to do it than by subscribing to the Crypto Finally Explained channel, huh? Shameless self-promos aside, and to wrap things up, in economics, there are two terms defining the current situation. A bear market, when the asset value is declining and the economy is halted, and a bull market, when the prices are growing, demand is high, and investors are happy. The same thing happens with a crypto bull run, which, while kind of unpredictable, symbolizes a steep ascent in crypto prices and can be influenced by the media, mainstream opinions, Bitcoin halvings, and other factors. If you want to know more about any of that, drop a comment below the video. And thanks for watching. I hope you learned something new about crypto bull runs, enjoyed it, and will come back to my channel. Until next time.